Josh Hamilton is a writer and podcaster who became fascinated with the Gamestop saga back in 2021. Since then, he has been writing a book about GameStop, due for publication later in 2025. I chatted with him about the book, about GameStop, and what insights it might provide about market rigging, Bitcoin, and the moves to digital money. Josh, it's a pleasure to chat with you again. I've had the pleasure of being in your podcast on two or three occasions in the past. So I wanted to return the compliment. And this conversation was sort of inspired by a tweet that you put. By the way, I insist on calling them tweets, none of this. A few weeks ago, where you mentioned that your book, which is primarily about the GameStop saga, is up to north of 140,000 words. So it's turning into quite a tome. But that would imply that you're becoming the go-to person to talk about GameStop. Maybe by way of background, tell us, how did you come up with the idea to write this book about a subject that some might see as quite narrow, but of course has a huge amount of depth? It is a constantly evolving saga. But what made you choose GameStop as your sort of focus for this latest book that you're writing?
Well, it was about 4 years ago now when I did a podcast about it for the first time. So I'd already had my podcast. I'd already done like over 100 episodes. I fairly recently started doing them on video. So I started on audio. And
Hmm.
then I interviewed this guy called Houston Wade about what was happening. And it was about 2 months after everything had properly kicked off, and there was, yeah, lots of wild speculation. The price was still doing really weird and crazy things, and I did a podcast about it with this guy whose Twitter thread I'd seen, and it got tens of thousands of views like immediately. And I was like, wow, okay, this is really interesting. It seems like there's way more than, a few hundred people still really obsessed with this topic,
Hmm.
because obviously it was, you know, wall to wall coverage at the end of January 2021 when the stock price was like peaking at $483. And, it was all kicking off that week. But I realized that, tens of thousands of people, maybe hundreds of thousands, were still like obsessively plugged in to what was happening with the stock. And I was like, wow, there's a really crazy story in itself that many people were inspired enough by this story, went deep enough on the research and decided, obviously COVID helped, we were all stuck inside, we had time, but that many people decided to go that deep on a topic that seemed really complicated and obscure. It just being part of watching what was happening with the stock price and became an education in itself in how the stock market works.
Yeah, and it all started pretty much with a Reddit thread, didn't it? There was I'll summarize this as best I can. Obviously, for anybody who's watching, who's maybe not got as much depth knowledge of shorting of stock, but essentially what had happened was that GameStop's stock was being shorted, and that means, not for your benefit, but for the benefit of anybody who's watching, that means that people were borrowing stock, shares in the company, in the hope that the share price would decline. And then if the price declined, they could then buy the stock and give it back to the people that they were borrowing it from. But the issue was that there was more shorted stock than the entire issued share capital of the company, which meant that when people then needed to cover their short positions, namely buy the stock price started going crazy. So maybe tell the story from then on. What happened in summary? And I'm aware that you've written a huge amount in this, but so it's quite a task to summarize.
Hmm. So basically, what happened after that crazy moment was the the price began to rise on the 28th of January 2021, hit $483, and on that day, a whole host of exchanges and brokerages basically decided to halt trading. Except you could still sell your position, but they halted all buy side trades across hundreds and hundreds of brokers and apps, things like Robinhood that you could purchase the stock on, and then the stock price cratered as the buy side pressure sort of collapsed, because it turns out that a lot of the price being driven up was not shorts closing out their positions to the extent that it was believed. So the report that Congress did later on showed that it was primarily buyer side pressure that had pushed the shorts,
Hmm.
pushed the price up that much. Some shorts had covered, but not anywhere near the amount that people believed were floating around. There was numbers being thrown around that the 140 was the headline figure, 140% short interest, but there was early in January, mid January, there was some dashboards reporting the short interest to be up to like 280%. Then there's a whole host of other ways through which you can get short exposure that's not obvious, basically, and not declared as short interest. For example, through ETFs, which
Hmm.
are there's a lot of very complicated ways that could happen, and I'm not the absolute font of all knowledge on it, but I do know that it can happen, and it can. But basically, the thesis was that the shorts had not covered their position, especially if the buyer side pressure was the reason for the price run up. That would mean that they hadn't closed out the positions that had led to such a high short interest.
Hmm.
So after that, the price cratered, and then sort of slowly through March ticked all the way back up close to about $300, and then crashed again, and then ran all the way back up, I think, to about $350, and then crashed again, indicating that there was still a lot of weird things happening in the background. And this is basically what the community of people that was watching this came to discover, was that there was a lot of things in the financial markets that are not obvious to all of us, that are not visible, that it's very opaque in a lot of ways,
Hmm.
and it's so difficult to understand what's causing the price to do whatever it might be. And also, it's much easier when everything is more opaque for people to hide large things like naked short positions. So it's been several years basically of watching the price do crazy things, people putting together theories of what might have happened and what might has not happened, and forever believing that the original shorts were never actually covered. Like that's what the people who bought back in 2020, 2021, and they're still holding today, genuinely believe.
So, is there a suggestion at all that insiders were trading or taking advantage of the share price volatility, between price hikes, or is it largely this suspicion that this was being driven by institutional investors? Because there are parallels, obviously, with cryptocurrency volatility as well, isn't aren't there? But the difference, of course, is that this is supposedly governed by the SEC. Um, so is there a kind of similar thing happening, do you think, in terms of almost like price rigging, or volatility rigging in order that people can make short-term gains?
Not from the insiders at the company. Ryan Cohen. So right at the beginning, right before the price began to tick up and up and up before it became crazy, Ryan Cohen took a large position in the company. He then became CEO and chairman of the board. He has consistently continued to add to his personal position, as have many of the executives on the board. So right now the share price is $36, something like that.
Hmm.
It's been ticking up consistently over the past 2 weeks. It's been 8 weeks of consistent price increases, which is really interesting. So Ryan Cohen owns 36 million shares of GameStop, purchased for approximately $96 million, average of 2.1 or $2.61 per share, and has never sold a share, despite at one point the value being $2.83 billion last year. He never sold a single share. He doesn't take a salary for his work as CEO and chairman of the board, which I think is incredibly rare. And he's literally working because he believes that the company can be turned around, which
Uh-huh.
is which is wild. So the story that gets told in my book is basically how a bunch of people who became obsessed with this stock watched and tried to understand what on earth was going on with the price action, uncovered a stupid amount of things that turned out to be true. So they'd be making predictions, for example, with the ETFs, and they'd be making predictions about it, and people write in long, in-depth posts where they've done their own research analysis and stuff. And obviously, that's filled with people making mistakes and just people not understanding things because it's just all people on the internet. But they were predicting things that completely turned out to be true. They suspected that, for example, Evergrande had GameStop swaps that was put in massive holes in their bottom line,
Hmm.
and Evergrande collapsed. They were, that's just one example of many, but the alongside that was the company themselves using the price volatility to slowly build up their cash reserves and then spend it on transforming the company.
Hmm.
So whilst the board themselves have been buying more and more shares, the company has done a number of share offerings where they have used it to build up cash reserves. So they used the initial spike in order to build up some money to start transforming the company. And from there, they have spent a lot of that. They tried an NFT marketplace, which didn't quite work out, but drove a lot of people crazy with some interesting things that there was a lot of cryptic tweets going on and people suggesting that GameStop were about to remake the financial system themselves and using NFTs and blockchain, which was a lot of fun speculation, but obviously didn't turn out to be true. Um, and slowly they've used this opportunity to turn the company around. They have consistently kept diluting the amount of shares, and every single time they do, the share price ticks back up to where it was, which is really interesting. People have theorized that's them using all of the weird price action to just take advantage of it and raise money. But anyway, so they raised now 4.5 billion, and then issued bonds worth another 1.3 billion.
And are those bonds all backed by Bitcoin or
So they issued the bonds. They've sold that. So they were sitting on something in the range of 6 billion, and that's what they are. Well, they have or are using to purchase Bitcoin. So they have not announced how much or when they have purchased Bitcoin yet. So there's been a lot of speculation this week that they were going to announce it at the Bitcoin conference in Las Vegas. So we'll see if anything plays out over the coming week. Um,
and
and otherwise,
clearly they're aping the MicroStrategy
mhm,
strategy
yeah,
in terms of redefining the company really as a Bitcoin treasury opportunity, where their bonds are backed by Bitcoin. Could it be construed that that was ultimately the strategy behind some of this, particularly in terms of the company? And I'm not talking about the directors, but the company's uh, direction and strategy, that they wanted to turn themselves into an investment vehicle made famous by the volatility in their stock, and given the fact that the core business proposition behind the company didn't have any validity any longer?
Hmm. Well, I'd say that the core business has actually now, over the 4 years where Ryan Cohen's been in charge. So he started with this company called Chewy that he founded at 25.
Mm-hmm.
Um, it was basically Amazon but for pets, and he wanted to provide the sort of service that you can get with Amazon for ordering things online for your pets, but with a more personal touch. So he grew that company to be worth billions, sold a large stake of it, and then that's where his initial money came to make his investment in GameStop. So since then, they've been working on turning around the fundamentals of the company itself, like the brick and mortar part. So it's
Mm-hmm.
now turned around to become, it's now um, profitable, having been on a many-year decline through a number of CEOs' mismanagement, seemingly. But so they've turned that around. So the gaming community is one that sort of hasn't yet become hyper digital. They've diversified a lot of the stuff you can buy in store. So they've done a really good job of turning the company around generally.
Mm-hmm.
They've like massively expanded their online store. And one of the things that people have compared Ryan Cohen to, or talked about Ryan Cohen, is his desire to compete with Jeff Bezos. And he did that with Chewy. So he successfully took on Amazon in an area that, like, realistically, you could imagine Amazon just moving into pets and pet accessories, pet food easily, and just dominating the market, right? But
Mm-hmm.
he was able and has openly spoken about his desire to compete with Amazon in that space. So people the whole time that the community has been talking about Ryan Cohen and speculating about his future plans for the company. His desire to compete with Jeff Bezos has been spoken about deeply. And the other thing that Ryan Cohen has to that matter is he learned a lot about business from his father. He was also taught a lot about investing and has also openly spoken in admiration of Warren Buffett.
Mm-hmm.
He started in much the same way. They took over Berkshire Hathaway and then turned it into an investing company or an investment fund or firm. Ryan Cohen, I think, is hoping to do something similar at this point. And this is one of the things that has happened consistently throughout this, writing this book and watching this saga, is that was like a meme that people were joking about years ago, was that they were going to use some of this money to start making acquisitions and become a much larger conglomerate. And people were joking about competing with Warren Buffett, calling the company Gameshare Bathaway. So that was a meme that now is coming true.
Yeah.
Which and there's like a constant theme that happens throughout the book, is in actual reality. I watch things that people memed about become true, and that's one of them. And I think that they will very much hope to yeah, pardon the
Yeah.
pun, ape ape Warren
But
Buffett's tactics.
Buffett has been very dismissive, obviously, of Bitcoin and doesn't really regard it as being uh, where you given the fact that he focuses on value-based investing, he doesn't really regard Bitcoin as having any inherent value. Um, Nor does the dollar, obviously, but that's a different issue. But clearly, the GameStop guys and executives believe that there is longevity in Bitcoin, and that Bitcoin is sort of digital gold as it's being pushed really by many of those in the Bitcoin community who, the usual suspects like Michael Saylor. Um, what's and but given the direction from which GameStop has come to arrive at the conclusion that it should be backed, its investment vehicle should be backed by Bitcoin. Um, does that imply that there are certain parallels with some of the conversations that are happening around Bitcoin, particularly in terms, you alluded earlier to the fact that there are certain things that have been happening in the background in relation to the trading of GameStop, but also there's certain things that have been happening in the background in terms of the trading of Bitcoin. And obviously, there's a lot of controversy at the minute in terms of the house arrest of Roger Ver, and his book Hijacking Bitcoin suggested that the core Bitcoin network was essentially a rigged pricing mechanism. You know, you offer a little tantalizing nugget of opportunity of alpha, and then you pull in a lot of additional investment, and then mysteriously the price declines. So you've got this sort of, admittedly, the volatility, the peaks and troughs are not as severe any longer, but certainly that seems to be a technique for reeling people into Bitcoin as a kind of reserve currency. And of course, the ETFs have been very active as well in terms of Bitcoin investment. So my question is, are there parallels between the GameStop sort of quasi crypto experience and what's been happening in Bitcoin?
Well, what I would say is that what's key here is in Bitcoin, when everything is on the blockchain, it's all open, verifiable, and checkable. I would I would suspect that there are people with large sums of money attempting to manipulate the price of Bitcoin, just as there are probably any valuable asset. What I like about Bitcoin instead, and what a lot of people I think like about this, and what draws parallel to this saga, is that it's all visible. Like the blockchain can be checked by any of us. And in financial markets, the manipulation that people see behind the scenes or accuse of being there is almost untraceable. So one of the misconceptions I had before this all kicked off was that there must be some central database of trades or some central hub where all the sells and buys are running through, where the SEC can just like dip in and check and audit things, and that they have a set of all of the ownership of all the people who are registered to this. Is no, the lack of centralized information is stunning to me, honestly. Like for the past 4 years, I've watched just with unbelievable regularity as GameStop has traded 50-60% in dark pools, which means it's not on the legit exchanges. It's just through the dark pools that are legally operated by large financial firms and clearing firms, hedge funds, market makers. It's it's all cloak and daggers and shadows and mirrors and smoke, and no one can see what's going on. People can hide short positions using puts and call options. You can fail to deliver when you have, well, you used to have 2 days when this kicked off. You now have one day to deliver the shares, whether you have bought whenever you've sold shares. And if you don't, you can fail to deliver, and you can just roll those fails over forever. Like the all of these practices are at the you know are sacrifices to true price discovery at the altar of infinite liquidity, or the highest possible liquidity. They
Mm-hmm.
want everything to be easily sellable, and it's promoted this amount of fake shares that nobody can tell how many there are. The phenomenon certainly exists. They openly say it exists. The mechanisms through which they say it exists are vary, but they've openly admitted it's a big problem, and yet nothing's done about it, because it would be a sacrifice of liquidity to fix these problems. You'd have to have actual price discovery, and sometimes like buy and sell orders might not get filled immediately. The
Mm-hmm.
it's awful because you don't actually there's no way to see all the transactions and for people to audit it and look for this manipulation. Whereas when
Mhm.
things are on the blockchain, they actually are auditable. And one of the things that this has made me realize, and I'd say a lot of people call for, is the use of blockchains to underpin financial markets, because then everything's, you know, checkable and you can run an audit easily. There's a
Yeah.
lot of utility to that.
Yeah. Yeah, it does sort of add to the argument or suspicion that that the network's infrastructure that is used to drive sort of the global economy are of questionable credibility, really, doesn't it? And that obviously would apply. There's been a lot of debate, as you and I have discussed in the past, about the role that central banks are playing in terms of uh, borrowing and the sort of invisibility of what happens when dollars are printed and
Mm.
put through the printing presses um, and where those dollars exactly end up. Catherine Austin Fitts, for example, has been suggesting that a lot of the money printing seems to go into the ether. Obviously, there's this vast balance sheet issue in terms of the amount of debt that is right at the core of the financial system in the United States and pretty much every developed market and every major currency. Um, so it does feel like it's a Ponzi scheme. The SEC, yeah, clearly appears to have allowed a degree of custodial trading that adds to the lack of transparency in terms of what's going on. But this would sort of add to the argument that perhaps we're about to see uh, an absolute implosion of the equities market. A lot of people have been predicting this. A lot of equities are vastly overvalued, and I would imagine GameStop would be one such equity, even at
Oh
current
no,
trade.
I don't think so. I would say it's heavily undervalued.
Well, yeah, of course, in terms of the fundamental changes in direction that have been adopted, maybe there is this sort of um, schism between the investment vehicle, if you like, and the core business offering, if you like.
Mm. Yeah, but
Um,
I would, yeah, suspect that you're right in terms of a lot of companies have probably got quite inflated value. It's because of the way the money printing works, or they say the money printing, but like it just gets funneled in at the top into markets, and then it sort of just ends up in assets. And I I've yet to have an economist or anyone involved in policy explain to me why we pay interest on our own money. Like, and I know this seems like a really stupid thing to ask, but like, right, okay, so the quantitative easing program prints like tens of billions, hundreds of billions without even a blink of an eye, right?
mhm,
But say if the government says, right, we want to spend 10 billion on this, you know, 50 new hospitals, or whatever, across the country, or we're going to spend this on training a bunch of nurses, or build in, I don't know, a, a better train network, or anything that the government would spend on, say, infrastructure, right? And that, we're like, oh, we can't do that because the debt, right? And we pay
mhm,
interest on the debt. We pay interest on whatever it is, 185 million a quarter, I think, something like that, on, or maybe it's more. I can't remember. Anyway, we pay a certain amount of interest on the debt.
mhm,
Why is this printing money power that we can just do for quantitative easing purposes not just used to build some stuff that we need?
mhm.
Like, I don't understand why we have to go into debt. For printing our own currency to spend in our own country on projects that would raise our GDP. I've never understood why we're paying interest on this money. Like, we are the country with
Yeah, there seems to be a
sovereignty over our currency. Do you know what I mean? So
yeah,
why are we paying interest to a central bank or to
yeah.
someone?
Yeah, it seems bizarre that we can, on a whim, increase the amount of spending or lending, for example, to Ukraine, and at the same time, as you say, cut winter fuel payments for people who have practically nothing. It just doesn't seem logical at any level that the people of the nation should derive any benefit from that money spending.
Mm.
What's in terms of just to go back to your the book? What's been your experience of the discipline that you've had to bring to the whole process in terms of committing to writing it and keeping, because even though it's non-fiction, you've presumably had to create a narrative and take a position on all of this stuff, and maybe go off on little tangents to discuss sort of macroeconomic issues and regulatory issues and so on. But how have you been able to maintain the momentum of book writing, and also retained any degree of understanding of the continuity of plot when you've written so much over the last few years?
The continuity of plot and narrative is something I'm currently grappling with. We need the final edit to make everything make a bit more sense, I think. But broadly, I've tried to tell the story from the perspective of like myself and the people who were watching this so closely. So my my narrative has been understanding what the community as such has been thinking and saying about it as I've watched it happen. So it's a lot of it has been just keeping checked in with what's going on, reading the latest theories, checking the latest memes,
Hmm.
um, seeing what's going on with the company, seeing what's going on with the price, watching different press releases, and then sort of bookmarking bits and pieces as I go along, taking out quotes, finding things, and then every now and again taking all of that and like putting it in and making it make sense in narrative sense. Um, so it tends to get done in big stints and then followed by mainly just like bookmarking stuff for a little while, just because the story keeps going.
You could you
This
could
this
presumably just
purchase,
keep writing forever.
yeah, but I mean this purchase, well, of Bitcoin when it gets announced, hopefully in the next week or two, their shareholders meetings coming up as well in the next few weeks. So that's hopefully when they're going to announce. But that provides a nice bookmark for now, at least to finish
Yeah.
the story. I doubt it will be the end, but there's always part two to come if more things happen.
Absolutely, yeah, yeah. Yeah, a to be continued kind of plot. But to what extent are you trying to use GameStop as a kind of parable for financial markets, or weird trading patterns, or obfuscation in financial trading markets, and and if you are doing that, what is the parable?
A lot of it's like I said that it's all smoke and mirrors and shadows, and we don't really we don't really have a way of looking at it deeply. The regulators don't have a way of looking at things really closely, and even if they did, they're captured by the industry, as many industries are.
Hmm.
There's there's a lot of people who come out and admit open ways of manipulating the stock. I mean, I'm gonna pull something up here for you. I'll just read it out. I just gotta find the bit. It's basically, I find this video of Jim Cramer from the Street Insider, or for the Street Insider. So Jim Cramer from Mad Money, who's talking to Street
Yeah.
Insider. It was a video from a long time ago, but I think it was created before the internet age, so he didn't ever expect this to be widely available for everyone to see on the planet.
Hmm.
Anyway, he said a lot of times when I was short of my hedge fund and I was positioned short, meaning that I needed the stock price down, I would create a level of activity beforehand that would drive the futures. And it doesn't take much money. So you can create yourself an impression that the stock is down, but you do it anyway because the SEC doesn't understand it.
Yeah.
And he said, what's important when you're in hedge fund mode is not to do anything remotely truthful because the truth is so against your view, and it's important to create a new truth to develop a fiction. So he used the example of Apple. So what they would do is they would, for example, say they needed the price of Apple down, right? He'd call up a couple of journalists or people, people who he could rely on to not keep their mouth shut. Say, no, I've heard some rumors that maybe AT&T or Verizon are not happy with Apple's demands and they're not going to carry the new iPhone. So with a couple of phone calls, you could create some rumors which spiral, and then you could put in a couple of things in take a couple of positions in futures, and then all of a sudden the stock price starts tumbling. So great, your short's coming up good, price comes down, and then what you can do is, then having watched it come down, that this is bullshit, buy the stock at a lower price, wait for it to rebound back when that turns out to be rubbish and the stock and Apple report good earnings, and all you've done is make a couple of phone calls, taking out some positions to make it look like you think something's going to happen, and then you can just ride out the market. That's illegal, and he admits it's illegal. And yet, he's explaining how you do it
Mm.
openly. And
Mm.
and I could find you 100 videos of people doing it. Michael Lewis, when he wrote his book Flash Boys, the guy who wrote Moneyball.
Yeah, yeah, I've read it.
He says the same. He said the same thing in an interview. Like the stock market is rigged by a handful of large individuals, like a handful of large players. It's and high frequency trading firms who can be faster than everyone else. So they're not even manipulating the market as they are just skimming stuff off the top of the manipulation.
Mm-hmm.
And that destroys companies. Like naked short selling by itself, this one issue destroys companies. Because even if you're allowed to do this and you can drive a stock price down, you ruin the way that a company, you ruin their access to capital because they're no longer worth the amount they are. Then that can make that can spiral into a company that someone's taken 30 years to build just falling to pieces. And this is what the financial markets have become, like that plus private equity has it, the financialization of the entire economy has been a hoover through which they've sucked out value and destroyed companies that would otherwise employ people. Like there's Josh Cosman wrote a whole book about this called The Lords of Easy Money. I think it's The Lords of Easy Money. I have
Mm-hmm.
to check that. Anyway, Josh Cosman wrote a book about this, and he told me that like he could point hundreds of companies that have just been devoured by vulture private equity firms. They come in, they strip the assets, they financialize the company, and then it goes bankrupt. They've already taken all the money out. They've taken all the dividends. They've taken everything, and then the company collapses, and then you're left with a functioning, healthy company that employed a load of people, just ruined.
Mm.
Someone's made money. GDP, doesn't get affected that much, but it destroys the bedrock of the economy. And that's what I think that's what people saw in 2008, and that's where all the anger came from when this whole saga kicked off, was people who were still angry about 2008.
Yeah.
And I think the reason that people became so obsessed with it is because of that anger, because of that feeling of injustice, and the fact that there's the money is all flowing around, and the stock market and the world of finance is probably part and parcel of having a large economy, but it doesn't have to be so parasitic.
Yeah.
It doesn't have to be so opaque. It could be transparent, and you could still have a stock market without it just being a vehicle for extracting value.
Yeah, absolutely. And of course, now we have, with the new Trump administration, and I don't, incidentally, I don't think it's a left-right issue any longer. It seems to be the establishment is pretty much owned by the private equity firms.
Mm.
You've got Scott Bessent, who's the new Treasury Secretary, previously with a Soros-funded hedge fund. You've got hedgies all over the place. They're one of the deputy chairman of the Conservative Party is a hedge fund manager. Many of the most prominent members of Parliament in the Conservative Party administration were hedge fund managers. Many of the front bench team in the Labour Party were involved with or funded by or previously had employment by hedge funds or private equity firms. It just seems that the government is no longer able to govern without the say-so of these financiers who, as you say, were front and center really in terms of this financialization movement, which essentially has carved up the money systems of the entirety of the West, pretty much.
Yeah. Yeah, and increasingly it's just becoming more and more centralized. Like you look at, BlackRock, Vanguard, State Street, they're just hoovering up money. And there's a fantastic book that I'm reading at the minute, actually, called Techno-Feudalism by Yanis Varoufakis. Maybe a little too socialist for your taste.
Well, no, to be honest, we're all becoming, I don't, as I said earlier, I don't really think we can define ourselves any longer on the basis of left-right politics. I think you do have to take the position that it's very much, about right versus wrong. I would agree, wholeheartedly agree with, and I follow him, of course, on Twitter. And I would wholeheartedly agree with much of what he's saying here about the hijacking. I took a different position from him, obviously during the Brexit debate, because despite all of what happened in Greece, he was never willing to come out and say that actually Greece would be better out of the Eurozone.
I'm not sure. Well, yeah, I'm not sure there would have been, at least not for a long time.
It's questionable, and ironically, Greece. I'm not absolutely sure on this, but I think Greece's debt to GDP ratio is actually better now than the United Kingdom's. So, so I honestly, some of the things that in the old world that I used to say in terms of how the financial markets were run, I would find thoroughly embarrassing now, but because it's becoming increasingly clear that the financiers have stitched everything up to disadvantage everybody pretty much, apart from their hinterland.
Yeah.
I think the Trump administration is a case in point. It's pretty much wall to wall. If you take even I think in the last discussion you and I had on your podcast, we went into a bit of detail about the front bench team's support by Israeli interests for one thing, but also the fact that most of them have been involved in various financial services companies. Not just Scott Bessent, the Treasury Secretary, but Lutnick, the guy behind former CEO of Cantor Fitzgerald, and also the guy behind the dollar stablecoin initiative. So they're essentially insiders pushing the administration increasingly towards cryptocurrency and Bitcoin as a treasury asset, which is so patently obviously, market rigging that I find it astounding, So it doesn't do much for capitalism, really, that we have corporatism running amok in just about every Western administration. So
what's interesting?
So anyway, but finish your point about Yanis's book.
Oh yeah, well, basically he argues that there is this new global class of people called he describes as the cloudalists. So basically people like Bezos, Musk, Zuckerberg, who used the very cheap money of the early 2000s right up into 2008 to basically take over every single just pump money and buy everything they could, grow as large as possible. And then since then, the entire economy has become fueled by central banks just basically printing money, which ends up like bolstering their coffers. Like
Mm-hmm.
they have basically become like the new, lords of this techno feudal system that we live in, and sort of governments just have to bow to them. Uh,
Mm-hmm.
the the interesting thing what you say about people pushing Trump towards crypto and Bitcoin is that we in the West have to do it at some point in some way. We have to figure out digital money because, and I read this book that I keep telling everyone about called Smart Money by this guy Brunello Rosa and someone else who Casey Larson.
Mm-hmm.
Anyway, they make the point or the argument that China has been working on their digital renminbi for a decade since 2014, and that they're preparing and have been preparing to roll it out as the new digital payment rails for the world. They've been using the Belt and Road Initiative to build this out across the planet, and if they succeed in becoming the reserve currency of the world, China sets how money works basically going forwards forever. Um, so they argue in their book that the West will have to have digital money of some form, and it's up to it's we still have to decide how that happens. So there's a couple of options. Like people use a stable coin, like just USDC as the base layer for money. You could use something else like Bitcoin as the base layer financial payment system, or you create a central bank digital currency, as we've seen in China, and there's a lot of people fear happening. And they point out that we get to decide the features of said central bank digital currency. China's has been designed with surveillance as it's a surveillance machine basically,
Mm-hmm.
but that's incredibly costly and very, 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 very costly and resource intensive to run because it means that they are counterparties in overseeing almost every single transaction with it. And that's incredibly complicated for a central bank to do. That's not what a central bank wants to do. That's what the rest of the financial system is meant to do. So he argues that what the West could do is build a digital base layer and then deal only with the private banks. And then from there, we would build a different kind of system on top of that, much like we have today. So cash wouldn't have to disappear. You wouldn't have to have everything, tracked in the way that the the Chinese system works,
Mm-hmm.
and that would actually be far more preferable to central banks because they would have to only deal with, the handful of counterparties would be the private banking institutions that issue currency already. So in the UK, that's got to be like 10, 15 banks. In Europe, maybe 30, 40. America, maybe 100 and something. And that's it. Otherwise, they have to be counterparties to the trade of any currency, basically, for, in the case of the United Kingdom, 70 million people. And a central bank does not want to do that unless
Yeah.
they're the Chinese government and have unlimited funds to spend on surveillance. You know what I mean?
Mm.
So the West is going to have to go digital in some way with the money, because otherwise China wins the future of money, and then we're really screwed.
Yeah. Well, there does seem to be the one narrative, which is very much about American hegemony and dollar hegemony, where the dollar essentially owns the alternative to Chinese defined digital currencies, where, as you say, the fungibility of money and the credit scoring system and the surveillance that's built in would come into play. But I've interviewed Aaron Day, for example, who's pretty much made it his life's work to counter the moves towards central bank digital currencies. And his view is that regardless of the type of system that you come up with, it may be that you could stop surveillance, or you would stop short at introducing um, any form of social credit scoring, for example. But you can effectively switch off people's wallets on a whim if you
Mm.
decide that they are not acting in the interests of the nation, for example. And that could be quite arbitrary. And then we saw that during the Silk
That's
Road
that's
Initiative, you
that's
know?
only well, that is true actually, to be fair. But
You
that's
know?
only if the central bank issues the wallet. What if they're all private wallets issued by the
Well, not necessarily, because if you look at uh, Lutnick's dollar stable coins, of course, they're working hand in glove with the intelligence services to
Mm,
identify actors who may have to have their wallets switched off. You know,
mm,
as you said earlier, the thing about bitcoins, or blockchains rather, is that everybody, or the agencies can go in, look at what's happening, and decide to switch off or
mm,
sequester, which is what they did with Silk Road. So the move towards digital wallets, regardless of how they're described, does provide a centralized means of turning off people's liquidity pretty much on a whim. And of course, many of the people over the last 5 years have been identified as being, potential actors that are not acting in the national interest are people who have just been asking questions and saying, should we be mandating COVID vaccines, for example?
mm,
So it's arguable to what extent a regime might want to start switching off people's liquidity or
mm,
access to benefits. I think, I interviewed Efrat Finnickson, who a few months back, and she outlined, the Israeli system that is starting first. The Israeli shekel digital
mm,
wallet will essentially start with benefits issuance,
mm.
and then work forward or backwards, whatever way you want to look at it. So it is questionable to what extent a digital currency is outside of the control of central authorities.
Mm. Well, I would say two things to that. First of all, if it becomes properly accepted, regulated, and there's any sort of digital currency, they would have to have the same theoretically. You can't just take away people's right to have an account. So I would say that the battle there is to be fought on our own rights and what the police and government can and can't do. However, what I would say is that what you're suggesting, Jeffrey, is that we can't have the government in charge of whatever central currency that um, whatever digital currency we choose to underpin the future global financial system. Therefore, we have to get one that's maybe already, in circulation, has already been thought out, is owned by some of the largest, financial institutions in the world. I think what you're saying is you want Bitcoin as the
No, I'm not. Um,
no, I'm messing with you. But what I'm saying
Obviously,
is that that's why it's an attractive option to a lot of people, and that's why people
yeah,
are
absolutely.
suggesting.
As it was to me, I was absolutely taken in by the argument that Bitcoin was a potential salvation. But then, of course, what's happened is very similar to what's happened with GameStop, in that
Mm,
all of the institutional funds have moved in. Very few people. It's very interesting that most of the selling of Bitcoin over the last few weeks has been by individuals, because it's obviously it's reached the $100,000 threshold again, and individuals have been selling their holdings, largely because I think there is a general feeling that Bitcoin is going to tank. Because it is being buoyed up by institutional investment, and the natural instinct of people who invested in Bitcoin, certainly in the early days, was that it was digital private money. It's
mm,
not. It's not. It's being invested in by the whales, by the institutions, the very organizations that these people railed against. That's why Bitcoin apparently came into existence. And there is a general feeling that the market and the pricing mechanism is rigged within the core network, and of course the fee levels are through the roof.
mm,
So it does preclude people, ordinary individual investors, participating in the market. And of course, there's been no attempt really for Bitcoin to become a currency, a proper currency. It is a store of value, and therefore that steps away from the core reason why Bitcoin came into existence. It's not digital private money any longer. It's a reserve currency, and that's not what the end game was.
No, I would say that it's kind of that whatever would be used as the digital private currency will be something built on top of it if it were to become, the more of a base layer. But I think you're right. It's looking like it's more like a reserve currency, a store of value, or gold, which to me is fine. I mean, I'm now not purchasing it for its transactability. I'm purchasing it, or hoping that GameStop purchase it, because I think that a lot of institutions believe that in the future, perhaps the near future, perhaps the distant future, that it will be used in some capacity as a base layer financial asset for large transactions across the globe. And that's why so many large institutions are now buying it up, because the US has to catch up on 10 years of Chinese development of the digital payment rails that make up their digital currency. The US can skip a lot of that by adopting something that already exists to help them. And that's, I think, why large institutions are buying it up now, because they predict that might be the case.
Mm. Yeah.
And
I totally agree.
So
But
keep going up.
Yeah, yeah, but unfortunately, it never happens. The price of any asset never keeps just going up in perpetuity. And of course, Bitcoin isn't an asset. That's a
No,
few, it's
no, but
a
I
few
believe I
digital
believe
bits.
in I believe in the game theory of how it plays out, as as more companies, states, maybe even nations just buy a little bit, as well, everyone else is doing it, so we may as well. Then it ends up on everyone's books, and at a finite supply and demand, the laws of supply and demand have to work at some point. At least that's the theory.
Well, we'll see. We'll see.
Yeah. This
So,
is not financial advice, by the way, for anyone.
so what's the plan then in terms of the edit and publication of the book? And by the way, have you got a title for it yet?
Yeah, it's called To the Moon. Funny enough.
Oh, yeah, just maybe before we finish, talk a little bit about the moon reference. What's that about?
Oh, well, it's basically a reference to it's a reference to the rocket emojis that people posted a lot, because the price is soaring up. It's like it's going up, it's rocketing up. So that became an emoji that was highly associated with it, and the price is going up so high that it's not on the stock chart anymore, it's up at the moon. So
Okay.
To the moon. So um yeah, so people would just right from the beginning, they would ask, when moon? So when are we going to the moon? So
And the publication schedule, editing and
yeah, editing is the next few weeks, and then it'll go to the publisher, and then it should hopefully be out in time for Christmas.
well, listen, I just want to say well done on hanging in there. How long has the work in progress been? Was it, I think I remember you've been working on this for 2 or 3 years, I think.
Yeah, it's been it's not letting me look at the hang on. I was trying to get a word count. It's at like 160,000 now.
Wow.
um, the Sorry, I've forgotten your question.
Yeah, I was just saying. Yeah, I think you
Oh,
answered
how
it.
long I've been writing it? Oh yeah, since
Yeah.
I basically started. I started deciding I was going to write about it in about July 2021. So it's been 4 years.
Okay. Well, listen, Josh, it's been a pleasure as always to talk about this. I know that we're not aligned, but I think we're both equally concerned about exactly the same issues. As to
Mm.
how the digital money thing is going to resolve itself, and of course, how the fundamental malaise in equities markets going to resolve itself. I think will probably play out over the next relatively short period of time. Um, It'll be an interesting ride. And yeah, I think I shared your view on Bitcoin. I less share it now. I must say, the more I read about it, and certainly Roger's book for me was a major uh, clincher for the argument that I think the CIA's paws are all over Bitcoin, unfortunately. Um,
Quite possibly.
uh, but um, but still, you could be right and I could be wrong, and that's the thing. We frankly have very very little idea. They
Mm.
introduce so much obfuscation into these markets that it's impossible for the ordinary observer to come to any specific and definitive conclusions. So your guess is as good as mine. But listen, the very best of luck for the book, and I'll be watching and waiting for the publication date. And do keep me posted.
Thanks. People can pre-order it now if they want. Also, I'll send you the link so you can put it in the description.
Yeah, just tell people how they do find out about you.
Yeah, the book you can find at wen-moon.com. Wen spelled WEN-moon.com.
Okay, brilliant. Listen, all the very best, and thanks very much indeed.